For Asia, it's looking pretty mixed. You have the Nikkei markets, which are doing perhaps the best right now.
Congress raised the debt ceiling so that we're not in a position of defaulting.
Things looked quite good, at least on the Nifty. Actually, on all the benchmark indices, it looked pretty good.
If you look at the Nifty chart going back 9 months, we've essentially been trapped in a 9% wide trading range.
Strong set, and it was a big margin expansion that we saw for the company, which was driven by price hikes.
Here is the first tick on the index, consolidating after its gains from yesterday. The Nifty up about 30-odd points.
Banks have recovered from their low in the last 30-45 days.
Definitely, we are confident that we can achieve that our credit growth a minimum of 12 to 14%.
Pre-market premium was running at about 140 rupees, but this is a much better start.
The results of corporate earnings are still being led by 2 or 3 sectors.
Nifty and the sensex building on yesterday's rally. The Nifty comfortably now above that 18,300 mark.
This is the first quarter of the 4 quarters where actually rural and semi-urban has grown faster.
The markets are virtually at the day's low. We have come off around 65 points from the highs of the day.
Well, that was a day so far, but the day ahead is looking a little different, isn't it? You're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant with me, my colleagues Rima and Surabhi here in the studios. And of course, Nigel is joining us from the newsroom floor. Guys, hi. Good afternoon. Things are looking a little more subdued as compared to even 2 hours back. And most of the gains are off the table. I mean, we were up about 60 points and we are not. We are absolutely flat, blinking red and green. So it's been a fair bit of drop-off which has happened. 18,344, nothing dramatic, but not in a knee-jerk fashion, but the drop started at about 11:30, 12-ish, and then it has continued all the way into the last hour or so of trade. Lots of action, though, in financials still. And, actually, if you look at stuff which is moving the market down, it is financials. I mean, in SBI and Bajaj Finance, if you look at what is helping the market on the upside, it is also financials. I mean, ICICI Bank, Axis Bank, etc. The biggest contributors on both sides, on the gainers and the losers side for indices, are financials. Market breadth has also come off. The NSE advanced decline ratio, it was comfortably 2.5:1, is now, I mean, the last I checked, 1:1. And, is this correction, pullback ahead of the Karnataka voting tomorrow? That's something which I think we'll have to wait and watch. The exit polls, as always, will happen once the polling ends. That's starting about 5:30 tomorrow evening. You'll have a first glimpse at how voters in Karnataka have voted. So, I mean, usually you do see some nervousness around large elections which are particularly close. At least that's the projection as of now. But that's near term, very, very near term. But it could be the fact that going into tomorrow and going into the election, the exit polls tomorrow, the market is a bit nervous, wants to keep it a bit light, and the markets come off a little bit. The high today is 18,344. So in the very near term, whenever the market reverses, that becomes the first port of call, beyond which 18,450 is the big level, which is the 78.6% retracement of the entire fall from the all-time high to the March close. Rima, hi.
Hi, and we also need to take cognizance of the fact that the global markets were subdued today. Hang Seng ended with a gain of more than 2%. The Chinese markets were down 1% by the close of trade. In Europe right now, the CAC is down 0.6%. The DAX and the FTSE also lower by close to about 0.25 percentage point. The Dow futures is down more than about 100 points. So that, in a way, explains why we've seen the weakness, particularly in the second half of the trading session. PSU banks, the Nifty PSU banking index is taken in on the chin. The Nifty PSU banking index is down 2.5%, falling for the third consecutive day now. SBI's hit, Canara Bank under pressure. PNB is lost close to about 3%. Union Bank is weak in trade. A couple of bright spots include the mid-cap IT names. So First Source and Birlasoft. Birlasoft numbers were good, but look at the reaction in the stock. It's up close to about 8% Tata Communications, F&O name, big move seen in the stock right now. Earnings are already out, so I'm not sure what's driving the gain there, but Tata Communications has rallied in pretty good volumes, and Apollo Tyres has seen a near 10% rally since the beginning of the month. So far, the numbers from CIAT, MRF have all been very strong, and today Apollo Tyres reports numbers, and all eyes will be on that.
Oh, absolutely. You guys have mentioned the large cap picture and the global picture. Just want to mention the dollar also. There's, in general, some risk-off that's kind of crept back into global markets. We'll get more on the inflation numbers from the US later this week. But for the time being, even the dollar index is pretty much at the highs of the day at 101.5 thereabouts. There's some amount of risk-off in the international markets as well. Here for us also, what changed very quickly is the mid-cap picture. We were having a stellar session, the mid-caps that is, till about 12:30, and then everything kind of has changed. So a lot of the high flyers that have seen big gains in the last few weeks, that's where the money's coming off. Your railway stocks, for instance, your RVNL, IRFC, these are stocks that are on the downside move. And Zomato is a very interesting one. All through the day today, yesterday, you've been hearing us discuss this, the possibility of ONDC coming out and really disrupting the food delivery space. And it seems, some of this debate, it's making its way to the stock because that's Zomato with a 5% cut now as we speak. So interesting moves, quite a few on the downside as well. But having said that, I mean, you still have the odd names like Asula, Lux Industries, for instance, Varun Beverages. These are some of the other consumer names that have managed a decent day. So, Nigel, pretty mixed picture. And it seems that, some tempering of the enthusiasm has happened today.
Well, that's right. The Nifty, went to the high of around 18,350 and faced some resistance out there. But I'll tell you what, for the final 60 minutes, you have to keep your eye on the Nifty Financial Services Index. That's because the weekly expiry plays out here. It tried to make a bit of an up move, but that was met with some bit of resistance. And remember, the Financial Services Index, it has components. 25% is on HDFC. So, that is a stock you'll have to keep an eye out on. The Bajaj twins as well are part of that. You'll have Chola Finance as well. But for the time being, at least, on the Nifty Financial Services Index, the options data, there's aggressive call writing. Those call writers, they are not factoring in a close above this 19,400 mark whatsoever. The 52-week high is at around 19,500 odd. If some way the bulls can get above that 19,400 odd mark, we could see a big rebound. Because positioning as of now is that level will hold out, going by the call writing that we have seen. So the question for the final 55-60 minutes is, will the call writers go home with the gains or will they get trapped on the wrong side? Remember, we had an expiry that played out on the Nifty a few days ago where the call writers got stuck on the wrong side. I'm not saying that will happen yet again, but that's an important mark you need to, track because the call writing has been very, very aggressive on the Nifty Financial Services Index. So let's see how this goes. But that's the index you need to keep an eye on. For the time being, it's mildly higher as well. You pull up the intraday chart, it tried to move high earlier, then it moved into the red, and now it's seeing a bit of a rebound as well. So that's a crucial index.
All right. We'll keep an eye, Nigel. Well, how should you position yourself, though, in the last hour now in terms of taking fresh trades? Mitesh is with us. Mitesh, afternoon. Good to have you back on the program. Some of the early gains disappearing, 10 points, 14 points now on the Nifty, 18,280 or so. On the index, is there a trade? And stock specific, what would you want to do? Okay, I think we lost that line with Mitesh. We'll try and have him back in just a bit from now. Okay, Mitesh is back, I'm being told. Mitesh, I don't know if you heard my question, but on the index, is there a trade? And on specific stocks, any fresh calls?
Yeah, Prashant, the index, actually, the overall setup is not yet turned negative. But with the overbought levels, I think the rallies are getting sold into, plus the event coming up, which you are highlighting. So it looks like, the market has lost some momentum, though it has not given a reversal. So in that sense, I think, wait for some kind of dip to play out to buy on the index. I think buying at a fresh breakout is not very rewarding in this current scenario. So trading with more of stock-specific ideas. I have DVs as one of the recommendations. I think, that's a stock which has done very well. It's showing good continuation today. So buy here with the stop at about 33.40 or maybe just below it. And look for targets of around 34.40, 34.50 to begin with. The other stock on my radar today is a buy on ONGC. It's come off the day's high, but the overall setup is quite positive. So here I would recommend buying with a stop at 162 for targets of 171.
Okay, those were some individual trading ideas. Let's talk about Mankind Pharma. It's had a stellar debut today. The stock straight away opened at a 20% premium to its issue price and has been only headed higher. So despite the volatility that we saw in the markets, that bit of a give up in terms of gains, Mankind Pharma continues to hold on to all its gains and build on it. 1,400 now on Mankind Pharma. Ekta's here with the details on that.
Well, yes, it's a strong debut coming in for Mankind Pharma, which in fact is the largest pharma IPO after Gland, which debuted in 2020. It has listed at the higher end of the price band at around 1,080 and raised around 1,297 odd crores from 77 anchor investors. It was subscribed around 15.32 times with QIB at around 49 times. So it has seen a lot of institutional interest, though in terms of retail subscription, it was still sub 1 times. Now, in terms of a couple of key points about the business, it gets around 98% of its sales from India. Pharmaceuticals is 90% of its business, but the consumer healthcare, which is around 9 to 10% of sales, has a strong amount of brands in it, such as the likes of Manforce, Unwanted 72 and Prega News. Its key USP is affordability, accessibility, with pricing at around 15 to 20% cheaper than what is available in the market. Now, in terms of a couple of key points on growth, the company is working towards the launch of new products to ensure growth going forward. The EBITDA margin is likely to be in the range of around 25 to 27%, so an improvement from the 9-month margins. They don't see anything wrong with the family being involved. They are looking to professionalize gradually, and they are not perturbed by competition in Tier 1 cities. In terms of a valuation on a 1 year forward, it's at around 30 to 31 times now, which is less expensive than a couple of the pharma MNCs, but nonetheless, it is a little more expensive at this point in time when compared to the likes of Suns and Ciplas as well as the Alchems of the world. Macquarie has written on it. They've initiated with an outperformed target price of 1,400 rupees. According to them, the company appears to be well positioned to double its profitability by FY26.
Okay, so that's thumbs up from Macquarie on day one itself, a 30% pop on the stock. We caught up with the management to get a sense on how they're looking at business growth in the near future. Take a look.
We are in a transition mode. Everything happens at its own pace. And if you ask me what basically is a thought process in Mankind, we want to be the most admired company. We want to institutionalize Mankind Pharma. Every department is being controlled by right professional. We are hand holding. And what's wrong in if some kind of involvement of a family is there, because whenever any kind of hurdles are there, we are always there to hand hold them, clear the roadblocks. When family is involved a bit, I mean, that really shows how passionately they are involved. But there's no doubt that we are on the path of professionalizing it.
Means quality is low, it doesn't exist, and nobody buys amongst medical profession. I don't think that anybody buys these things, because the quality, we are there in the market for 27 years, and most of the products are very economically priced. And I believe that we have proved it. We have proved in the market that we are absolutely quality products. We produce quality products at affordable price, and we will continue doing it. We will continue doing it, and you will see that there will be growth in the market when we are very. I mean, if you have quality, your product is backed with quality, and you need not to be afraid of competition, because competition is always there.
All right. Well, Deepan, what do you make of this listing? Blockbuster. Stock is still holding with solid gains, nearly 30% gains in a single session. Those who got on the IPO will be very, very happy. The question now is, what do you do from here? Do you think all the good news is in the price? And given that this one now has become relatively more expensive, we pull up a valuation chart, which my director will pull up for our viewers. You'll see that now, in fact, it's trading at a bit of a premium in comparison to companies like Alchem. So, view on Mankind, and would you go on for some of these other names that are trading at a bit of a discount in comparison to this entity?
Good afternoon, and thank you for having me on your show. Right now this is the first day of listing, and typically there are many considerations with way market parameters and tactics also come into play over there. So let's not take one day as the correct value for the stock. I think once the excitement and the fancy kind of dies down, maybe a few weeks down the line, will the stock price will find its correct value. But this is one company that we are keeping very close an eye on and right on our radar because of its unique business model. It has stayed away from exports and all the issues related to pricing erosion, US generic, and all the kind of solid B2B businesses which other pharma companies have pursued. And this is one company which is very aggressive in the domestic market. So it's almost like buying an FMCG company, and I know that you called your channel is called like pharma FMCG. But that's the correct way to put this company. It is the pharma FMCG company. And when we are chasing the consumption theme so aggressively, this is one company we cannot ignore. And I think that if it maintains the kind of growth rate which we have seen as per its track record, it will always trade at a very high premium compared to some of the other pharma companies as well, which have fought with many other risk factors. So right now, I think I wouldn't want to comment on whether it is cheap or it is expensive. Maybe let a quarter or so go and the stock find its level. Then we can give an opinion on whether it is worth investing or not. For the time being, I think if you are got shares in the IPO, then I think you should remain invested. I think a lot of averaging also is taking place at this point of time.
Okay, well, what a debut. Deepan, just coming to you, I just want to highlight one more story which is playing out. Indiabulls real estate has seen a very sharp fall, over 15% on news that merger of NAM Estates and Embassy One into Indiabulls real estate faces a delay now. Sonal is here with the details and what this would mean. Sonal, over to you. It's down 20% now. Go on.
Well, it has come in as a setback for Indiabulls Real Estate. Now, remember, it was in 2020 that they had announced this merger with Embassy. Until now, the final approvals have not come in. To just give you the news first, sanction to merger of NAM Estates and Embassy One, which are two Embassy Group companies into Indiabulls Real Estate, has been withheld by NCLT Chandigarh. Now, remember, NCLT Chandigarh had earlier raised concerns based on some of the observations by the IT department as well. This has come in as a setback because this was supposed to be the final approval for the merger, and it has been getting delayed for quite some time now. And if these two get merged, Embassy's stake in Indiabulls Real Estate will come to 45% from current 10 to 12% as well. So now, of course, this has come in as a setback for the company. The company says that merger already stands sanctioned by NCLT Bengaluru bench. Bengaluru bench has jurisdiction over NAM Estates and Embassy One, which is the Embassy Group companies, and Chandigarh bench has jurisdiction over Indiabulls Real Estate, and this is the one which has been stopping this merger for now. They say that they believe these objections and concerns were unfounded, unjustified, and do not impact the merger as well. They are awaiting the detailed order, and they will go ahead and appeal against this order. So that is going to be the next course of action that the company is going to take. But definitely a disappointment because there has been a long pending wait for this approval to come by, and looks like it will take longer than what shareholders had earlier anticipated.
Okay, all right. Thanks very much, Sonal, for that. Stocks taking it on the chin, 18% lower. It's a very sharp fall. Deepan is with us. Deepan, just a broader market question. I mean, tomorrow we get the exit polls out of Karnataka. Would it matter any which way? Or you think it'll be short-lived, shrugged off pretty soon? What's your sense?
I don't think it matters so much. It is one state. I know it's an important state. But the real test match is going to be 2024, and what dynamics play out over there is going to have implications for the short, medium, and long-term trend of the market. And whatever the outcome of the Karnataka election is, I think very important learning for all the political parties over there, BJP especially. And there's enough time to do course correction when the big match starts in 2024. So I don't think there's much of an impact on the market, unless it's a complete kind of a very unexpected type of an outcome where BJP loses massively or something, or some sort of those kind of indications come. Then I think markets will take that into cognizance. But by and large, I don't expect anything major to come out of the elections and its effect on the market. These markets are being driven more by interest, inflation, and of course we have a fabulous earnings season on the way. It is causing a lot of volatility, stock-wise.
Who knows? I mean, they may not need to course correct. We don't know. The exit polls themselves show, right? But there used to be opinion polls, there used to be exit polls, the actual results, and sometimes the actual is completely different from. And then, of course, before opinion polls, there are the expert projections of what the opinion polls and exit polls will show. So
sophisticated, and I think that also has an impact on the market and the sentiment of the voter and the investor as well. But it's just one state, so I wouldn't read too much into it, Prashant.
Analyst expectations,
pre-quarterly
results, and then quarterly results.
Then the monthly updates in between. So
and con call after
then the con calls after that.
So we're guilty of all. We're guilty of that. Right?
By the way, those SRF numbers, absolutely. I mean, it doesn't get more on point than that. All three numbers, top line, bottom line, and EBITDA. Pretty much in line. That margin sort of deterioration that was expected. Sonal's poll was throwing up a margin decline to about 24.7%. And that's pretty much where the company has come in at because of their chemical segment perhaps showing some weakness. Technical textiles and the others, obviously, packaging also looking like a bit of a drag. That was the expectation at least. And the number seems to be in sync with it. We'll come back with some more details on SRF in a bit. As we take that break, let's listen into some excerpts that came in from our conversation with Lawrence Belanco of CLSA on some key levels to keep in mind as we track the Nifty's journey forward.
In the short term, unfortunately, we think we get to top of the range. So we're talking about 18,500, 18,800. That's likely to cap the upside in the near term. And then we see further ranging activity. If you look at the Nifty chart going back 9 months, we've essentially been trapped in a 9% wide trading range between 16,700 and this 18,800 area, which is quite similar to the profile of the S&P chart, which has been range bound between 3,800 up to the 4,200 area. And we see more volatility within that range before ultimately breaking out.
Welcome back. 18,250 on the Nifty. It attempted a bit of a recovery about 15 minutes back, but that's again getting sold into. As you can see, absolutely flat now on all the benchmark indices. Let's talk about SRF. Came out with their numbers 2 minutes back. Sonal is here with the highlights and the key takeaways. Sonal.
Well, absolutely inline set of numbers, Reema. It was expected to be a muted quarter led by their technical textiles and packaging segment, while the specialty chemicals business was expected to do really well, and that is exactly what has happened. Revenues have come in absolutely in line with what the street was working with. So have the margins. The margins are at 24.6% versus a poll of 24.7%. Overall, the profits have come in at 562 crore rupees versus an expectation of 560 crore rupees. Now, going by the segmental breakup as well, the technical textile segment that has declined 13% in terms of revenues, and packaging segment has declined 16% in terms of revenues, while the specialty chemicals business has grown 32%. The expectation was of a 28% increase, so the specialty chemicals business has done better in terms of expectations. The company says that packaging segment did see some headwinds, and they saw significant pressure on margins in Q4 of FY23. This has been on account of global oversupply in both BOPP and BOPET segments, and that is something which led to lower spreads for the company overall. They say that they are remaining cautiously optimistic about the prospects of the packaging segment. It is a smaller segment, but because of the cyclical nature, there was a margin pressure this time around. In the technical textile segment, they say that they are focusing on improving the sales in their belting segment, and also they are seeing some demand recovery in the NTCF segment, nylon tire cord fabric, that is in FY24. So cautiously optimistic on packaging, but they are seeing some recovery in technical textiles. On the chemicals business, they say the fluorochemicals business performed exceedingly well because of higher volumes and also higher realizations that they saw. They expected to continue as well. The growth growth that they've seen in the specialty chemical segment. So inline set of numbers, outlook on two segments is very positive, but on one of them they are cautiously optimistic. The stock also trades at 34 times 1-year forward earnings. It has come off slightly from the highs, but still higher by 2% in trade right now.
Okay, got that. Thanks very much, Sonal, for the details there on SRF. Let's ask Deepan. Deepan, so, SRF, of course, very widely tracked, very widely held stock, but it's gotten sort of trapped in a range over the last 15-odd months or so. What's your view on it? Any take on the numbers that we've seen today?
Yeah, so we first disclosure that we are investing in SRF, and we are seeing gradual improvement taking place across the board in specialty chemicals company. We saw Anupam Rasayan, RC Drugs, and now SRF also come with very decent set of numbers. And especially bullish on SRF because higher and higher proportion of revenues are coming from the specialty chemical business, which is high value add. The stickiness is there. There is a lot of customer connect as well. And this business was mildly impacted by rising input costs because of the inflationary environment. But now that is gradually subsiding, and we will see margins gradually improving over there as well. It's a business where the return on investment also is higher. And the other two businesses are getting a little bit commoditized, but thankfully for the company, the specialty chemicals, the high value add business is growing at a much faster pace and has a larger proportion to the revenue. Of course, the stock has underperformed and moved sideways, but the result of that is a slightly more reasonable valuation for SRF. And I think that as and when the specialty chemicals new capacities go on stream, the growth rate will be sustained. So generally positive on SRF from these levels also. And it's a quality specialty chemicals company, so one could look at it in their portfolio.
Okay, all right. Deepan, I wanted to ask you about FirstSource. This is one of the few companies that are at a 52-week high. But the indications of the management is that maybe the worst is behind, and they reported a growth after 3 quarters of decline. Do you track this one?
Well, I used to track it, but it went through a very tough time a few years ago or so. And basically, our strategy when it comes to software is to look for quality companies which have very strong niches which can compete with large cap IT or large BPO companies on their own turf, and which have consistent track record and a great future because they are present in certain segments where there is no threat of cut-in technology. And FirstSource doesn't kind of fit these criteria, so we generally avoid it. And but I'm sure it's available at attractive valuations, and you could have a trading value at any point of time. But these are not companies you hold on a long-term 5-year, 10-year basis and expect them to deliver a significant outperformance.
Okay, all right, Deepan, we'll leave it there. Thank you very much for your time. Appreciate you joining in and running us through that view, and speak with you soon again. Raymond numbers, by the way, are flashing at the bottom of the screen. 194 crore profits. They're down year on year. Revenues are up 10% at 2150 crores. These are year-on-year figures which we are flashing. Stocks, of course, done very, very well over the last year and a half or so. Actually, I mean, it's done very well from pre-COVID levels. It's done phenomenally well. Pashupati Advani of Global Foray is now joining us to take some questions on what he's making of things. Pashupati, good to have you with us here. Thank you very much.
Likewise.
I mean, the market took a bit of a break in March, and then it just took off. April was super. 9-10%, and it gets us very close to all-time highs. But do you think there is enough in the mix, enough in the tank for sustained meaningful gains from here? What's your sense?
I'll tell you, I think India is performing and doing well, but the thing is there are, according to me, tremors in the West, particularly in the banking industry, which I think we are not going to be able to escape, because at the end of it all, money flows where the water flows, and it's kind of like that. And there are tremors in the US. I mean, there's some scary numbers coming out. They're saying a lot of mid-cap banks in the US are going to go under. I also asked the question that, the same issue that has affected mid-cap banks in the US, which is this mismatch of investment versus deposit. We've also had our rates go up. So I don't know how our banks have actually been able to manage it. I think that's the it'll be interesting to see how that looks in time to come. It's not going to show up immediately, but it'll show up in time to come. Prashant?
So that's the key reason why you're not very fond of banks out here in India, because you think there is going to be a mismatch?
No, I think that, and also that is one issue. And the other issue is I think that most of the banks have given money to fintech companies who have been extremely liberal in giving loans. And I think that some of those loans, as people get, lose their jobs and things, will probably, just not come back, and they have to be actually written off. And the question is, very few NBFCs and banks have got the balance sheets to be able to just actually bite the bullet and still show good results. So, that's my take on it. I'm maybe a slight contrarian, certainly in the banking industry, but it is something that I believed in for a while, and I've been wrong because the banks have continued to power themselves upwards, which is wonderful.
Pashupati, hi, good afternoon. Surabhi here. Good to be chatting with you after a while. Since we're on the subject of financials, I wonder if you've had any interest at all at any given point in time in Paytm. This quarter, at least, it's very clear that they've put their head down and they've focused on profits. Losses are reducing. The EBITDA line is looking better. Any thoughts on this?
Yeah, well, I actually hold some, so that's that's always good. But we've been talking about the four sort of big sort of new wave stocks, so which Paytm, Policybazaar, Nykaa, and Zomato, that came to the market kind of at the same time, and they all got kicked pretty hard. I think Paytm has got kicked and has now come up. I think the lows were in the low 500s, but they're still all way below their IPO prices, and therefore you've got a lot of retail and institutional investors who are upset, and particularly the ones who have taken the pre-IPO pricing and kept it and had locked in. So, but out of those four, I would say that Paytm is the best and definitely worth nibbling into, simply because I think it's a business model that's sustainable. And, they have the technology, they have the business model, and they're out there punching. So it's just, I think that's the reason to own it.
I guess it's all about the price. Now, I don't know if you'd want to talk about your price of acquisition, but I'll frame the question differently, Pashupati. If someone's buying now, can they ever hope to get to IPO levels, or was that just sort of out of whack? What's fair value looking at the current metrics on Paytm?
No, I think that, when the IPO seems like a dream right now, because I think at or close to the IPO level, you'll have a lot of institutions also selling off. But I think that it has been sufficiently kicked to be able to come, do quite well. It's kind of jumped up from like the mid 600s to just over 700 in the last 2-3 days. So I personally tend to just wait for a little bit of a pullback before going in again. But I am actually thinking of increasing my position if it does come off a little bit, and maybe 5% or so in the back into the 600s.
All right. Hi, Ms. Advani. Good afternoon. Nigel on this side. You were nibbling earlier, a couple of interviews earlier as well. You were nibbling into Paytm. I thought by now you would have taken a big bite. But anyways, we'll take that. If it corrects 5%, then maybe you'll be, back on the nibbling list. But you also told us, a while back that you like mid-cap cement. Now, that's going to be quite an interesting space. And I'll tell you what, I have my ear to the ground. After a while, there is some possibility that maybe there could be one such deal that gets closed out, maybe not in the next 3 months, but maybe the next 6 months or so. What do you like from mid-cap to cement? Because there are a couple of tailwinds. One is consolidation, which may or may not play out. But input costs have reduced. And in an election year, we'll see volumes picking up. So your view on that?
So I agree. I mean, I do like the cement sector. I like mid-cap cement because it's cheaper than large-cap cement. And obviously, as you mentioned, consolidation is one of the buzzwords that is long overdue, according to me, because the large cap cements are trading at much higher valuation than mid cap cements. So it's just a matter of time. I think that, as you said, they are going to have demand going up. The input costs are going down, and it is election year 23-24. So, it's going to be good. And the government is certainly planning to finish a lot of their projects, and that's all going to need cement. So that's another thing that, I think that that's why it's high on my list. It hasn't done, some of the stocks have not done too well, but, I think maybe this year is cement's year.
Pashupati, we'll leave the conversation here for now. Thank you very much for joining in. Need to get into a break. As we do that, listen in to excerpts from our conversation with Gautam Dugad from Motilal Oswal Financial Services on their view on the ongoing Q4 earnings season.
In April 2022, when we first published the FY23 estimates, our EPS estimate for FY23 was 870 rupees. Today, as we speak 12 months later, we are at about 815 rupees. So roughly 6 to 7% of cut has happened. We should not see any significant increase from here on as far as rates are concerned. So while FY24, you can see some bit of a downside risk given some of the sectors which are globally linked, like metals, oil and gas, and IT. But I would still say that around 13-14% growth for next year also is in the realm of possibility, because you are seeing a sharp rebound in auto after 5 years.
Welcome back. Well, no big move we are seeing at around 3 p.m. Today on the index, even on the Nifty Financial Services Index. In fact, the Nifty Bank has seen a bit of a downtick. So that's rather interesting. The hope was that maybe, in fact, we could see a bit of a fight back. But as we speak, the Nifty Financial Services Index is as flat as can be. So it's a good time then to shift focus to our special segment. D-Street Chatter. Nimesh is with us. Nimesh, what are you picking up? Some signs of a bit of a break today. We hit that 18,350 and U-turn from there.
So basically, it's a depth consolidation and nothing wrong, right? Yeah. We've been moving up for the last many days. So a bit of consolidation is healthy as well, and that's playing out in today's trade. But I guess, as you rightly pointed out, we're heading towards the big resistance of 18,300 on the upside. So that again is playing out in today's trade. I guess some bit of momentum is also lost in many of the momentum stocks. Look at the PSU bank stocks. Look at the railway stocks. Like all are down 3, 4, 5%. And there you've seen a huge move in the last many weeks now. So some bit of consolidation is clearly visible in the broader markets as well. But I guess from a flow point of view, that's good news that the flows are still quite positive, is what I understand. In fact, there's going to be a basket buying at the leading FI desk, largely in the large cap names. But that's the feedback, that there is basket buying in the large cap stocks. I guess earnings will dominate for the next few days, but the big liquidity event to watch out would be the MSCI index review on Friday. That would be a big liquidity event to track, because the changes would mean India will see an inflow of $1.3 billion. Of course, one stock, Kotak Mahindra Bank, will dominate because $800 million is likely to come into Kotak Mahindra Bank. But largely, that's a big liquidity event to track. As I said, 1.3 billion is a huge amount which will come into India. But broadly, a day of consolidation, and you're seeing first signs of some bit of profit booking or fatigue in the momentum stocks.
Well, that's right. The PSU banking space, Canara Bank, they've come out with the clarification at around noon today. But that doesn't explain why they're guiding for provision number of 5% of their book, 9 lakh book at 40,000 crores, or some more clarity on that front. No, that'll be good actually for all the PSU banking names. But we'll wait by it for that. What about individual stocks? What are you picking up?
Okay, so in terms of individual names, the first stock on my list today is Krishna Diagnostics. There was a large block, nearly 3% equity changing hands. I believe a leading leading private equity investor was a likely seller. So maybe the disclosures could be quite important as far as Krishna Diagnostics is concerned. The second stock is India Glycol. Yesterday the stock was up 700%. Today a bit of consolidation in that stock as well. The stock Y today is down 25%, and one of the reasons is there was a big selling going on from a domestic mutual fund. That seems to be largely over now in India Glycol. So that's something to track going forward. The third stock is Varun Beverages. The stock is at a new 52-week high today. Big move in that stock. There was a clean out trade in the morning from a leading FI, and after that you've seen a big surge. So looks like the large selling pressure in Varun Beverages is finally over. And the last stock is Mankind Pharma. This has been a big talking point across all dealing rooms. Huge volumes on the very first minute as well, and there were large blocks as well. So it looks like some of the domestic mutual funds who were anchor investors did bought in the open market as well on the first day of the listing. So huge volumes on Mankind. So even today's FI number or the DI number would be because of a large volumes in Mankind Pharma.
Remember, retail did not fully subscribe for Mankind Pharma. It was just about 0.9%. So retail gave it a pass. But I wonder today, did they buy today? But Mitesh is back with us for a few BTST calls. Mitesh, what do you have for us?
So I have a buy on Tata Communication. That's, I think, given a very strong price volume breakout, likely to see continuation for the next few days. Take a stop at about 1285. Look for targets of 1320 here. And ABFRL is something which I remain slightly negative upon. So STBT with a stop at 206.5 for targets of 200.
Okay. All right, got that, Mitesh. Thanks very much for the trading calls. We will now shift focus to our special segment, Earnings Corner, where we tell you about the upcoming numbers to track for the rest of the week. And we still have quite a few of them coming up. Well, today we already saw SRF numbers and the stock has been reacting to that. The other big number to track post-market hours is going to be Lupin. Tomorrow we'll hear from Dr. Reddy's. Also, L&T will be reporting its numbers, so it's a big day. Thursday, May 11 is all about Asian Paints, Eicher Motors and Siemens. Those are some of the big names to watch out for. Finally, on Friday, the key number to track will be Cipla along with IGL as well as Tata Motors from the index. Well, since we're talking about earnings from tomorrow's list, of course, as we just mentioned, Dr. Reddy's is the key one to track. So let's go across to Ekta for a quick synopsis of the expectations. Ekta, take it away.
Well, for Dr. Reddy's this time round, we are expecting a revenue growth of around 15-odd%, EBITDA of around 1,600-odd crores, margins at 25%, and a profit of around 1,145-odd crores. In terms of expectations, the sales are expected to grow on a year-on-year basis. The estimates are wide at around 18 to 21%, but the average is around 15% growth, led by the major markets such as the US and India. Now, Q-on-Q, the US business is expected to come off in terms of sales due to a lesser contribution from the cancer drug Revlimid generic as well as the antibiotic Ciprodex. Now in Q3, remember that the US sales were up 9% on a Q-on-Q basis to $370 million. It beat estimates of around $270 to $280 million because Revlimid generic contributed much more than what the street was anticipating. This time round, the US sales are estimated to come in at around $340 million. Now in terms of the other markets, it is expected to sustain in terms of growth. Remember, in Q3, India was up around 10% year-on-year. Watch for markets such as Russia, which was up around 45% in the previous quarter, led by volumes as well as price. In terms of margins are expected to be at around 25%, but the range is wide, 23 to 28%, simply based on what exactly Revlimid generic could contribute in terms of the US business. Profit will be aided by a low base as well as the operational improvement or the deliverable from Dr. Reddy's this quarter. Commentary will be important with regards to US launches as well as price pressure.
Thanks a lot for that, Ekta. Well, Vivek as well as standing by to run us through the key expectations from L&T. Vivek?
Larsen & Toubro will be declaring its results, and it will be important to track the kind of guidance as well as the order inflow as well as the core margins that the company had guided to at the end of Q3 and whether the company has managed to meet the guidance. In talking about the core numbers itself, revenues are seen higher by close to 12.5%, coming in close to the 59,300 crore mark. EBITDA is seen higher by almost 11%, coming in closer to the 7,250 crore mark. EBITDA margins for this particular quarter, the consolidated EBITDA margins are seen slightly north of 12%, and profitability is seen higher by almost 15%. Now remember, the company's guidance at the end of Q3 was that, when you're talking about the order inflow, the company said that they should be able to beat the earlier guided 12 to 15% order inflow for FY23 as well as the execution guidance. So they were expecting to beat the order inflow as well as the execution guidance. However, talking about the core margin guidance, they went ahead and cut it from 9.5% to 8.9% for FY23. Now talking about the key highlights in the quarter gone by, softer commodity prices are expected to aid margins. In fact, Macquarie says they expect 47,500 crore of core orders. Total order inflow, according to Macquarie, is seen north of 63,300 crore. BofA Securities expecting FY23 sales growth of close to 18%, a strong beat to the company's guidance of 15%. Key factors to watch out for: FY24 guidance, large projects in the pipeline, as well as FY24 core margin guidance would be what the analysts on the street would be eagerly anticipating for.
Okay. All right, thanks, Vivek, very much for that. Those are the major numbers that we'll watch out for, Dr. Reddy's as well as L&T on the index. But for the time being, let's turn the spotlight on to a conversation on technicals. We have Jay Bala of Cash the Kiosk joining in for exactly that. Jay, thanks for joining in. So the bulls would be wondering if this is just a bit of a breather, just a pause after what's been a pretty good run, or whether there are signs of fatigue and exhaustion. What have you made of the markets and, where we are right now at levels of 18,300 thereabouts?
Good to be here, Sylvie. Thanks for having me on the show. The markets are running into an exhaustion zone, but I know it's just pending a reversal, like I said last week. And the marker for me on the Nifty is a close below 18,089. If that were to happen, it's a small range, 18,089 to 18,042. If we get a close below that, it's a confirmation sign that it's an exhaustion and a reversal. So at the moment, we are seeing signs of exhaustion, but we haven't got a reversal in hand yet. But looking at the other parts of the markets, it does look like it might come through really soon. Probably, this market's going to hang around here for maybe a couple of days. But if 18040 goes, I think the reversal is in for the market.
And if the markets do reverse after going down to levels of 18040, we head down all the way to 17,500. What would be the levels?
Good question, Rima. Yeah, it's going to be a very dramatic decline, and we're going to May and June promises to be a couple of months of dramatic price action. But don't preempt the market. We are just waiting for the reversal to come through. It's always very sensible to play with the market. You can have an opinion, and I'm keeping my terminal on read-only mode. I'm waiting to pull the trigger. I usually trade the Indian markets using a double leveraged fund. So it's going to be pretty dramatic, and we're going to see the June lows of last year get taken out over the next 2-3 months.
Okay. So I mean, to use that view, is there any way to use that view? I mean, I guess if you believe that, then you don't go berserk on the long side, right? I mean, you be careful, trade small, and is that the way to do it? I mean, if you're trading, of course.
That's right, Prashant. Even when you're trying to go short, as I said, you've got to be very, very, very sharp and careful about it. You need the reversal to come through. At the moment, the markets are trending up, but as I said earlier, it's showing signs of fatigue and exhaustion. I pointed out a few strong sectors in the last few weeks. Capital goods, that's been doing pretty well, and FMCG have been pretty okay with ITC. So those are the strong pockets to stay with. But even there, you should start booking profits here. And yeah, the longs have to be pretty light.
ITC is today one of the big contributors to the decline. Is it still? Of course, it's been such a big winner. What's the view there? ITC?
Yeah, ITC is probably got one last push up above the 2-week highs. If it does that, it'll be a textbook technical analysis compilation of what a reversal is and how it comes through. But we'll be very watchful. At the moment, it's still okay and taking the index up. As long as the stock stays above 409, I think it's still in a bullish mode. But right now, as we speak, even now, it's showing some signs of fatigue. But it's still not a reversal, so not to preempt the market. So as long as ITC stays above 409, I think the index will trend upwards somewhere towards 49,000, and the support for the FMCG index is about 46,500, 500.
What about PSU banks? Of late we've seen a lot of weakness in PSU banks, not just State Bank of India, but even mid-cap banks. Any thoughts?
That's it, Rima. See, we had a out of the blue reversal for the banking sector a couple of days ago. We had a 1,000 points drop. A break below that low, about 42,500, will mark the reversal for the sector. And SBI today, in the last few minutes, has shown the crack come through. If SBI were to go down below 568, that will drag the entire sector. But to me, the weakest one is Canara Bank. I think against a risk level of 327, I think it's going down somewhere close to 260. So, mid-cap banks and other banks, in the PSU space are showing signs of crack, and they're probably going to lead if the markets reverse at its start.
Okay, by the way, I just want to pull up the Zomato stock once again, because this is serious pressure now that's building up. Almost 7% down move on Zomato. And that's a pretty big drop, considering the kind of steady run-up that we were seeing throughout the month of April when the rally was underway. That's today. Let's pull up maybe a 3-month, 6-month, or 1-year chart on Zomato. It will illustrate the drop that's come in after the April rally. Yeah, so there we go. A pretty good up move in the last 3 months, and now comes this big decline today. Any thoughts on Zomato? I mean, there's a lot of fundamental talk around food delivery, but I'm just wondering, have you looked at it on the charts at all, Jay?
I don't pay such close attention to the stock. It's generally it tends to fail a classic setup, and it's got a little bit of bounce to work with, probably somewhere close to 72. But I don't think the risk rewards are favorable for a trade setup there.
There is, of course, that ONDC. The bigger thing, of course, is just so Swiggy's valuation got cut, right?
It's been quite dramatically. It was 10.7 billion, I think, in 2021.
So second time this year, it's down to 5.5, and the Zomato's valuation is now about $6.5 billion. So, and by the way, both are, I mean, from what I remember, almost equal market share, 50-50 between Zomato and Swiggy. Actually, Swiggy was a tad higher from what I remember, and valuations being cut quite dramatically. The unlisted market also now kind of coming down to where the listed entity is at. So that is the big loser. Actually, it's the biggest volume-led loser today that we are seeing. But there is so much stuff which is moving around. IRFC, RVNL, the PSU banks are continuing to lose for the second straight day. PNB, I can spot Indian Bank and a few others. So on the losing side as well, I mean, there are volumes today. Market breadth is now turned. 300 stocks separate declines and advances, and declines are more. So this is a reversal from the earlier first couple of hours of trade. We'll take a break here. We are back more on the markets on the other side. 6 minutes to close.
Welcome back. Karnataka is all set to go to the polls tomorrow. With the campaigns done and dusted, all eyes are going to be on the polling booth. The star-studded campaigns and fiery manifestos have set the stage for a heated election day battle, which will determine the fate of the 224-member Legislative Assembly. Harish Upadhyay from CNN News 18 joins in with more details. Harish.
Well, it's a crucial election for all three parties. Remember, in the last 38 years, the state of Karnataka hasn't given a successive mandate to any political party. 3 out of the last 4 elections, we've had fractured mandate, and with several surveys indicating that it could be once again a fractured mandate, the JDS could well become the kingmaker on May 13th when the results come out. Remember, multiple issues of the last 1 year or so, the BJP government has faced allegations of 40% commission in government contracts. They've also faced the PCM campaign of the Congress party, but of the last 10 days or so, we've seen the BJP gaining momentum. Initially, it was the personal attack on Prime Minister Narendra Modi by Congress President Mallikarjun Kharge. Later on, we have seen the Congress's manifesto proposing a ban on Bajrang Dal, really giving momentum to the BJP capitalizing on it. Now the question is if this will work. Also, Bangalore is a crucial battle zone for both the Congress and the BJP. The Prime Minister spending the weekend in Bengaluru, holding 2 mega road shows on Saturday and Sunday, and the BJP is hoping that will work for the BJP.
All right, that's comprehensive. Thanks very much, Harish, for that update. So votes go in tomorrow, and then later in the evening, starting 5 p.m., we'll have the exit polls out of Karnataka. The market will also have a close eye on the results. Well, for now, we're going to end with about 7 point cut on the Nifty. It was looking like a smooth journey in the first half, 60 points, 65 points at the day's high, but in the red by close is how we're going to end. Market breadth overall also deteriorated quite a bit. I just want to quickly highlight the losers on the index, the big ones, and then we'll look at broader markets. Divi's, Coal India and Indocent are the big losers. But if you want to go by what dragged things, it was ITC, it was SBI, and I think Bajaj Finance. These were the stocks which actually took things a little lower. UPL and UPL was the other one which actually was a significant sort of cut as well. Results came yesterday, numbers disappointed. I think there were some earnings cuts, etc. So the results, the stock reaction showing up in terms of the day-to-day. But broader markets, of course, much more color, a lot more action there. Prima.
Absolutely. And the star there was Mankind Pharma. The new listing glowing home with a gain of about 32.5%. Just a quick word on the winners. TCS didn't feature on the gainers list, but right now, as I can see it, it's the second biggest Nifty mover. So sharp up move coming through in TCS in the last 10 minutes, and TCS ending with a gain of 1.5%. IT Boys, Wipro, Infy giving it company. Divi's Laboratory is the top Nifty gainer today with an up move of nearly 3%. Some private sector financials, IndusInd Bank and Axis Bank saw buying, and along with that, Tata Motors and M&M.
That was a large cap list, but as Prashant said, the color really was in the mid caps. You have so many individual movers. Mankind, you've mentioned, Rima. Mahanagar Gas, clear hit on numbers, 7.5% on the upside. Birla Soft, 7% on the upside. SRF numbers came in just a while back, 2% up on that stock as well. But then comes the losers list. Westside's numbers came out just a while back as well, just half an hour, 40 minutes back. Stock is actually ending down 4.5%, though year on year, the growth numbers look pretty impressive. Margins looked up. But anyway, stocks ending lower. Kansai Nerolac lost a lot of the enthusiasm that we were looking at in the earlier part of the session, 1.5% down there as well. And Zomato, a lot of chatter on food delivery and whether ONDC can really be a big disruptor in some of these businesses like Swiggy and Zomato. So down about 6% on that one stock. In addition, Sula has had a huge pop by the end of the day. It's not really a Friday move, but an 8.5% surge on Sula. So big move coming in over there. Tata Communication was the other one, which was on the upside, as was Mannapuram. Indiabulls Real Estate in terms of newsmakers because of the NCLT courts in Chandigarh not approving the merger, at least raising some objections on it as of now. That stock was down about 20%. So those were the big news headlines of the day. Finally, the Nifty going home with a cutoff of 5 points and the mid-cap index absolutely flat. So that's been today's session. It's been a one-day up Friday, one day down Friday, one day up Monday, one day down again on Tuesday. The market's getting into a volatile trajectory. We will wrap up on this edition of Closing Bell. On that note, thank you very much for watching. But don't go anywhere because our Tuesday special Commodity Champions coming up next.